Well, good afternoon, everybody, and I don't know if I can follow all that excitement with insurance. It's probably the most boring topic ever after that. But yeah, so as Bill said, my name is Chris Rutland. I'm a risk management specialist with the United States Department of Agriculture Risk Management Agency. I'm in the Valdosta Regional Office, which covers Florida, Georgia, Alabama, and South Carolina. But we have offices that cover the whole country. And we are the agency within USDA that administers the federal crop insurance program. So I'm just starting a timer here so I don't drone on too long for you guys. So this presentation is going to be a very high-level overview of a new crop insurance product that we have rolled out just this year for containerized farmed oysters. I'll go quickly through the coverage the program offers, and including some key characteristics, the covered perils, some key dates, and some deadlines. So the next slide, this is USDA's standard non-discrimination statement. I won't read the whole thing to you, but I'll just summarize to say that USDA is a non-discrimination employer and provider. And then also this disclaimer, hopefully I won't say anything wrong today, but just in case I do, nothing that I say today or anything in these slides can overrule a policy or a procedure that's already published. So, right into it. What does the program cover? The Shellfish Crop Insurance Program is a yield-based program, and it covers your expected production of oysters for the current year, produced for the half-shell market. These have to be grown in containers, and they have to have been placed at 4 millimeters or larger. And this is the way you prove this is with your seed purchase receipts. The coverage periods for the calendar year. The coverage is only for production loss from 4 covered perils, which I'll go over in a second. And lastly, I'll just point out that this coverage may be eligible to have certain additional coverage attached to it, and that's some cool things. I won't go over it in detail today, but if you want more details on that, come see us at our table just outside to the right on the door there. So what are the what are the covered perils? There are 4. They are named storms, which are hurricanes or nor'easters, not really a thing in this part of the world, but hurricanes, excessive heat during a low tide event, freeze during a low tide event, and low salinity caused by excessive rainfall. And now these are not like arbitrary things. These are defined events that are outlined in the policy, what triggers. So to have an indemnity under this program, one of these 4 things has to happen in your county. RMA will make that determination and then publish that. And then you also have to have an individual production loss that's shown in your sales records for that year. So where's the program currently offered? This is the initial pilot area for the first year. And again, I won't read it to you, but you can see the map and the counties are in this table. The listed counties are currently the only counties where the insurance is available. However, we are targeting a county expansion for crop year 2025. And if you are producing oysters in a county that you don't see on this list, please come and talk to us, because we are in the pilot stage of this program. And so we're still trying to build it into something that's going to be the most useful tool for you guys to manage risk. So how it works. This is a very, very high level overview of how it works. But essentially, if you think about it like a crop, like corn or cotton or soybeans or something, you have acres and a yield, right? Well, so your acres are the oyster seed that you place in your containers, and your yield is your historical average survival rate from placing to harvest, to sell. So we take that approved yield, which is the seeds planted times what I just said, which is your survival rate, and that's based on your individual history. Then we have to value that in dollars, so that is multiplied by a price that we publish, or you have the option of using your own historical price if you have that in your records, if it's better. And then times the coverage level. You can customize that coverage level to the point where you want. It can be a very basic catastrophic policy, or it can be a Cadillac, very high coverage policy. So then at the end of the season, if there's a loss, we take your production to count. That's what we call it, but it's essentially the production that you actually do harvest, the oysters that you do harvest, and that's times that price election made at the beginning of the season, and that's the value of your production to count. If A is less than B, then you get an indemnity, and that's times your share in the operation. And again, this is a very high-level overview. I encourage you to come see us. We have cards with a QR code that will take you to a tool that will help you locate a crop insurance agent near you, and they'll be able to explain all of the program requirements, the eligibility requirements, the documentation requirements, and they'll be able to provide you with an individualized estimate of what it will cost you and what the coverage would be for you. So next, I'll just cover a couple of important dates. Crop insurance works on a cycle, a yearly cycle. And probably the most important date on this slide is the first one, November 30th. That's what we call the sales closing date. That's the deadline by which you have to apply for coverage for the following year. So obviously it's already passed for 2024, but for 2025, by November 30th, that's when you'll need to request that coverage. That's really the most important date on this slide. After you get in touch with a crop insurance agent, they will tell you precisely all the requirements and deadlines, but November 30th. And I would advise you, don't wait until the last minute, because this program, maybe even more than some of our other crop insurance programs, is based almost exclusively on your records. And so the record requirements are maybe a little more complicated, a little more involved than even for some other crop programs. So definitely don't put it off. So just a note about kind of where we are in this process. This is what we call an RMA pilot program, which means we're kind of in an experimental stage. We're rolling it out, but we're still tweaking it. We're still customizing it, changing it to meet your needs, because ultimately that's our goal. What we want to do is to have a product that is sufficiently robust and accessible that you're able to really use it to manage your risk. And so with that in mind, we have this pilot review period where the program is reviewed every year, and if we need to make changes or adjustments to the program, we can submit those directly to our board of directors, which does not have to go through the whole federal regulatory approval process. So it can be kind of streamlined, and so we get the program up and running on its feet. But I will say now, one of the main drivers of those changes is feedback from our stakeholders, which is the people in this room. So we really encourage you to come and talk to us. If you have ideas, if you have concerns, please come and talk to us at our table. I'll also put our contact information on a slide at the end. But we would really appreciate your feedback. That's one of the main reasons that we come to events like this. So we're all ready to that end. Actually, we've got some hopefully changes coming down the pipeline for 2025. That process has already started. We like to say the government's a big ship, it turns slow. So we're already thinking about 2025. So definitely, if you have any feedback for us, come and visit with us for a minute. And in fact, since I think I have a little bit of time, I'll go through a couple of the changes that we've requested here. So now this is a big caveat. This has to be approved by our board of directors, which it has not been yet. So these are all kind of preliminary, but we would like to be able to, number one, allow some different records to establish your minimum seed size. Number two, we're already looking at some counties to expand to. Number three, we're looking at a process that maybe we can do some yield adjustment for kind of widespread bad disaster years, so that you don't feel the full impact of that low production in your guarantee for this year. And also, we're looking at allowing qualification for coverage with records from an adjacent county. So currently, you have to have 4 years of records in your county where the insurance is going to be, but we're looking at allowing that allowing adjacent county records to satisfy that requirement. So if you're just across the bay in another county, you get a new lease, maybe you can use your records from the old county. But again, emphasize, these are targeted improvements for 2025, and they have to be approved by our board of directors, or they can be implemented. So this, probably the most important slide in this deck, contact a crop insurance agent. And I referenced this a minute earlier, that we have a tool on the RMA homepage, which is just rma.usda.gov. It's pretty easy, it's pretty obvious how to get there once you get to that page. But we have a tool that lets you put in your zip code or a county or a city, and it will tell you all of the agents within a radius that you specify. And with that, concludes my prepared remarks for today. Thank you again so much for the opportunity to talk. This is my information, my boss's information, and come see us, come visit for a minute.
Hey, Chris, how does this compare to ELAP?
What was that?
There's an ELAP program that in natural disasters will help farmers recover. How does this compare or contrast with the ELAP program?
Okay, excellent.
And thank you for considering smaller seed, because a loss of 1 million 2 years in a row at 1 millimeter with a hurricane, it's devastating.
Sure. Well, so first, let me clarify. What we're talking about, we would still only insure seeds that are 4 millimeters or larger, but what we're changing is the records requirement, that's the type of record that's allowed. So currently, under the language of the policy, you have to have seed purchase receipts that show that they were purchased. Well, that at 4 millimeters, which that disqualifies a lot of people, right? That would purchase small seed and upwell them, or that kind of thing. So that's partly what we're looking at. But so we're not actually at this time looking at insuring seed for smaller than 4 millimeters. To your other question for ELAP, I would say with the caveat that that's our sister agency, the Farm Service Agency, and I'm not that familiar with their programs. That's that's really a disaster program, and the same thing with, they have a program called NAP, the non-insured disaster assistance program, and the difference is that is truly a catastrophic product. This product, and it's based on the county averages and such, this product is customizable both in terms of the coverage and also it's based on your individual history.
All right.
Thanks.
Other questions?
Yes, that is correct. So Leslie was just pointing out that while our program is still in pilot status, you're actually eligible for both. You can have both. Now, if this moves to a permanent program, you won't be eligible for NAP anymore if the program is available in your county. But yeah. So,
Chris, I
thanks,
have a
Leslie.
question. That one of the things we found in the South is that the oyster growth is fast enough that it's terrible to lose 1 million seed. It's terrible to lose a crop. Losing your gear is potentially puts you out of business that year if you lose all your gear. Is there any possibility for a risk management agency program that would cover the gear that you put in the water?
Well, so technically we actually are not allowed as the Federal Crop Insurance Corporation, which is the wholly owned government. I won't get too in the weeds on that, but we actually, by the Farm Bill, are not allowed to insure structures or directly. We do have an endorsement that it was one of those additional coverage options that I mentioned, and it's called the Hurricane Insurance Protection Wind Index Endorsement, which can attach to this insurance. So it's like extra insurance on top of this, and that program, it's still based on your expected production for this year, like how much money you could potentially be paid. But the trigger is different. So the way that works is if you have a hurricane in your county or parish, we're in Louisiana, if you have a hurricane in your county or parish, or any county that touches your county or parish, you get that payment automatically. And there's no adjusting, there's no, like a loss adjuster or anything like that. It's basically RMA declares that your county was a hurricane county and they mail out checks. So that is kind of maybe indirectly you could think about that as managing some risk on your equipment, but the short answer is no, not with RMA, but yeah.
All right, I would just encourage people to potentially investigate that, because I think that's one of the biggest challenges for farms we've seen is they make an investment in gear and a hurricane hits the next year. And so you've had no chance
Yeah.
to make any money in that gear yet. So. Any other questions for Chris?
I can hear you. I would repeat it.
Is gear loss common always during a hurricane?
You spoke about the incidences that are covered, hurricanes, low salinity because of excessive rain. In South Louisiana, we monitor the river stages and the way the Gulf of Mexico flows. Back in 2019, salinity dropped significantly between April, May, and June, and we lost about 30% of our triploid seed because they don't like low salinity. So would that be covered because it's an indirect rain event? with
Well,
river
so
rising?
the salinity, and if you're a data nerd, you can look this up because it is published. It's public record. But the salinity is actually based on the rainfall in the watershed for your county. So it is like a defined set of parameters that have to happen for it to trigger. But yes, potentially excessive rainfall upstream, even upstream, that caused a low salinity event would still be covered. Yep. Even if it's not in the county, right? That piece of it, the trigger will be for that specific county, but to make that trigger happen, it looks at the entire watershed.
All right, Chris, we'll end there. Another round of a hand for Chris, please. And then Julie is up next.
Thank you.